I'm your host, Effie Pilarinu, and today I'll be talking about the DeFi. There's a lot to discuss. I will try to stick to the basics and give some broad insights that can be understood, especially for people that come from the traditional world and don't understand what DeFi is all about. First and foremost, we are talking about unregulated experimentation and innovation, and that is why essentially it is true innovation. When I hear the word DeFi, I always think of non-custodial processes in capital markets, in financial services. What does that mean? It means we don't need custodians to do whatever needs to be done, whether it's payments or asset management or lending and borrowing, the basic financial services. So thinking of DeFi, we're talking about decentralized applications. The degree of decentralization varies, but mainly we're talking about non-custodial processes and applications. And what that means, it changes the way we do finance. We process finance today, which is all based on a sort of accounting a ledger that proves ownership of an asset and intermediaries that are the custodians and much more. So DeFi is equivalent to what I would call self-sovereign digital ownership. And this is important because we can get rid of KYC, so to speak, because there is no such thing, because payments and lending and borrowing and asset management are not based on who I am and who the other counterparty is, but it's based on mainly validating the transaction. It doesn't matter who is on the two ends of the transaction. So I like to think of it as shifting to a world where we're focusing on validating the transactions in a totally different way. It's not about the counterparties. So again, let's go back to DeFi, and there are a few groups of financial services that are being offered and experimented, if you want. We have payments in a decentralized way, peer-to-peer. We have lending and borrowing. We have asset management. And most importantly, we have exchanges. So in that categorization, we would say that most growth has been in the DEXs, the decentralized exchanges, and in the lending protocols. In the decentralized exchanges, again, instead of having to think of an exchange like Coinbase, we have a decentralized exchange where you don't need to identify yourself in order to participate or use the exchange. And then the liquidity is provided by users, liquidity pools. It's kind of a crowdsourced approach to liquidity instead of the institutional liquidity providers that we know in the regular financial markets like Citadel. Those are replaced by pools from retail. And in general, when we are thinking of the high interest rates that are earned in DeFi, that are earned through staking or farming, Basically, those also are peer-to-peer and retail transactions that enable this. And we can think of them as analogs of the repo market, or analogs of, lending securities and earning interest by the day, by the hour. So we are experimenting with decentralized storage. We're experimenting with earning interest on assets in a different way. We're also experimenting in having users issue assets or structure assets that was not possible before. So we're taking capital markets from the wholesale level and bringing it to the retail level, and basically these dApps are tools where you could manufacture all the financial products that we know are manufactured at the wholesale level and then distributed to retail. I think it's important to know some names and recognize some names. For example, Uniswap is one of the big and top decentralized exchanges right now. Names like MakerDAO and AAVE are major names, major players in the decentralized lending space. MakerDAO was one of the first movers with their stablecoin DAI, and AAVE is one of the top ones right now, and even moving into more experimentation with the real world, with mortgages. We have in the asset management space YEARN.FINANCE, that is a 2020 growth story. Think of them as a robo-advisor that automates and optimizes where you can get the best yields from all the different protocols. And then we have payment decentralized applications like Flexa and the Lightning Network. I'm not going to go into deeper detail, but I want to say that I remember 2 years ago at the Crypto Valley conference in June 2018, I met and spoke extensively with Loe Lu, who's the co-founder and CEO of KYBER Networks, which is another decentralized exchange more focused on small merchants and enabling them to accept any type of cryptocurrency, and their customers to be able to exchange it through the DEX. And what struck me there, the conversation, was that, the different DEXs and the different dApps, they're not all completely decentralized. Some of them are decentralized with respect to the custody or keeping the funds, or others are more decentralized with respect to their order book or the liquidity pools. So DeFi is an umbrella term, and there's degrees there. As long as it is unregulated, we will have a lot of experimentation. The area that I care a lot about, and I'm more of an expert, is asset and wealth management. And recently, in collaboration with the Wealth Mosaic, we issued a report profiling 10 companies that are involved in the wealth and asset management space and are using in one way or another blockchain to transform services in the space. Within those, we had one candidate, and that is Profiled Consensus, and they have a whole suite of dApps and other tools to facilitate decentralized finance. Decentralized finance today is mainly built on the Ethereum protocol. EOS and others are behind, but most of the dApps are on Ethereum. And I want to close by saying that DeFi is really about changing how we design, how we structure financial products and financial services. It's not about distributing in a different way, like, you know, online, mobile, 24/7. It's about really doing things differently. And in my mind, especially in the asset management space, it's all about structuring in a different way, and this is very exciting. We are seeing innovations coming into the space, even within the products that are ETP wrappers of cryptocurrencies or portfolios of cryptocurrencies. Even there, we will be seeing innovation, because they'll be able to pass on the interest earned from staking if the cryptocurrencies are eligible for staking. So there is a lot to be excited about and a lot to learn. And there is only one way to really learn. Get on one DEX, open a MetaMask wallet, open an Ether wallet, go ahead and spend $10, $100 or euros to start getting a feel and understand what does it mean to have the transparency of seeing a transaction being processed, seeing the fees and what are the fees, how much does it cost, understanding what is the difference between a wallet and a DEX and a dApp. So this is really the only way to do this. And with this, I want to close and say that DeFi may have a lot of bugs and scams like any new technology, but there is a genuine philosophical but very practical reason for it to exist, be funded, and to innovate. So decentralized finance and all these apps are worth taking some time, even though they're not so user-friendly, to experiment and understand what will be coming up in the next few years in terms of financial services without the current financial institutions. What pieces of the centralized entities, the intermediaries, will remain transformed probably is unknown at this point, but there's going to be some balance, and the balance will shift towards more decentralization rather than less. Thank you very much for listening.